Reading Dr. Jeffrey Scott here. Apologize to those of you that went to the video and are wondering why there's nothing there. I don't know what happened. I'm using a different computer is all I know, and it didn't record. So I'm going to repeat it and post it. And again, sorry for the inconvenience. All right, so this is my part two of my weekend market update. In this one, I'm just going to talk about some of the things I was concerned about, look at a couple stocks. This will be relatively short. And I'm doing this, I'm in the PST. It's only 5 o'clock, but it's 8 o'clock back East time. Thanks for all those that watched part one. Maybe because I did it early on Friday, had a pretty big number of folks. Thanks to those that signed up for the Traders Forum. There'll be a link below for the Metastock Conference, which I'll be speaking at on Friday. Again, my name is Jeffrey Scott, marketmripro@gmail.com. My Google group is called Top Down Trader. My website's marketmripro.com. Disclaimer, this is for education purposes only. Any recommendations in the spirit of education, not investment advice. The intent of this video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk, and you are solely responsible for any investment decisions you make. I may own or intend to sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. I have tools in multiple platforms, but I am an independent trader. Here's that conference Friday at 5 p.m. Eastern Time. All you got to do is click on the link when it comes up and then register, and love to have you there. If not, I'll get you the video afterwards. As I mentioned over the weekend, my Valentine's Day special, $19.95 minus whatever discounts you're entitled to. Email me for a link at marketmripro.com at gmail.com. And I am planning on Sunday doing a walkthrough of the app demonstrating what I do to use it. And the Google Groups called Top Down Trader. Just go to Google Groups, sign into Google Groups, look for all groups, find Top Down Trader. Let us know how you want to be contacted. Not much news on Monday. It was a holiday. There was a couple of earnings. Tuesday, we got some manufacturing and home builder confidence. Home builders have popped as rates have come down. And then the other thing is we've got the FOMC on Wednesday and a full week of earnings with several of the stocks that were interesting to me, including Transocean Rig with earnings on Thursday. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Let's go look at some charts. To me, this is the most important chart that I have. And on the left is the NYSE, on the right is the NASDAQ. It's hard to believe that both of these are in the same period of time. If you look at the NYSE, on Thursday, it hit an all-time intraday high. The last closing high was on Wednesday. We are just a modest amount off of those highs. Let's see how modest of an amount. I'll go from the closing high. I've always struggled with these tools. It's so close together. So we're 1.29% off closing highs. We are on essentially at all-time highs on the NYSE. You could see the new high, new lows, very positive, up-down volume, positive, AD line positive. Stocks above the moving averages maintained high, 0.72 on the 13-week. And the high-low jump has come down to 83. On the day we hit the highs, the high jump hit 100, so no surprise that the market pulled back a little bit. Still riding up this trend line, nothing has broken. That looks awesome. Contrast that with the NASDAQ, which is broken down. Look at its high-low jump on the composite. Oh, highlight that, minus 94, almost 95%. That's bounce range. That means there's only 5% of the days in the last year will be more extended to the downside. You can see the stocks above the moving averages is kind of neutral. It's off the highs and the lows. You can see the new highs minus new lows were negative, but the AD lines and up-down volume were positive, and the 13-week is 0.33. You also may note, check this, sorry about that. You'll also note that it had a eureka on this big rally day. It's under the influence of Hindenburg-Omen on both the NASDAQ and the NYSE. Which one's going to win? That's the key here. Does the NASDAQ pull us down or the NYSE pull us up. Something else that I thought was remarkable, if you look at the commodities, two things. Let's take a look at the 10-year. Oops, I'm sorry. You can see that the 10-year has broken down and the 30-year has broken down. These are the end of the curve that is controlled not by the Fed, but by the smartest money in the market, the bonds. So this is telling me that the bond folks don't see a whole lot of inflation coming. That's a good thing. So what are we to do? So I thought I would just show you something that I'm looking at in the stocks and make this a short video. So the JAS layout is where I do my work, and it starts with what's called the impulse list. And that impulse list includes the features that I have found to identify stocks before they take off. And if we look at HWM, one of my recent calls that I gave out when it was about 198, and I gave it out back here. And the reason why I gave it out back here was because 198, yep.
Sherry Scott, Sherry.
All right, just continuing on. So what I scan for the things that I think lead to stocks going on big moves. I look at impulses. My impulses are momentum, breakout, volume, gaps. Those are four things that are often associated with a big move. I also look at two trading systems, CPR and EMS, and you can rank a big list by how many of these signals here are at YN. It's not an expensive stock, and you can see it has momentum, breakout, volume, gap, and a CPR. I have found that most major moves occur with a line of these popping up. All right, I have my bongo here. This is my trending indicator, a daily and a weekly. How many bars are uptrend in green or downtrend in red? Is it an uptrend or downtrend, and for how long? I have three different sorts based upon 2 days, 5 days, and 13 days that I look at for momentum. I look at relative volume. A lot of people want to look at stocks and look for those stocks that have a big volume day. Clearly, big volume is interesting. Well, here's a stock. I'm not sure it's my cup of tea. It's a baby cheap stock, but big move on massive volume. Then I can look at what I call my supporting actors, but really secret weapons. I look at, is on balance volume above or below its moving average, and is it breaking out that day? Red is below, green's above, and how many bars? And then the relative strength versus the spider. I want stocks that are outperforming the market. Green above, red below, and how many bars? So I like to scan that. Now, there are other things we can scan for, and within the program are a number of other things that you can look at, the various signals, relative strength, squeeze, relationship to moving averages, and we're going to add even more. Why is this important? Because on the mentoring that we did a couple weeks ago, probably the best thing that we did is I took that big view of 35.99 and we created what I now call my JAS rockets in flight. And these are the characteristics that we found. Now, is this meaningful? Well, I'm going to let you tell me in a couple of minutes. You can see here all the characteristics. I look for trending on the weekly and daily are up. The daily trend is less than 9 days. The weekly, it has to be positive, so greater than or zero. Up, signals greater than zero, down signals zero. $5 and 500,000 shares above the 200-day SMA, and the volume and the two relative strengths have to be positive. Simple scan. Well, when we apply that, you get 294 stocks, and this was Friday. And what's really interesting, I've noticed if I take these and I just look at an index from adding each of them together, and give it a second to come up with that index. It's literally, wouldn't you like all your stocks in your portfolio to look like that? It kind of looks like the leaders index that we used to do. So this is getting me to think that maybe the scan is interesting. So I've got some refinements to do. I've already thought of a couple of things differently, but let's take a look at some of what we found. Now, I want to add sector and industry group here because it'll make it even more interesting. But let's start with home builders. Taylor Morrison. All right, and let's look at a weekly chart. Uptrend, pullback, sideways moving, breaking out, super strong seasonality. Relative strength works on the weekly, not just the dailies. Double momentum on the weekly taking off. And that double momentum has been my go-to signal. And you could see we had double momentum back here, and that was when the run began. So is this the perfect looking chart? No. But remember those interest rates I showed you were going down? How about Pulte Home? I know that's in here somewhere. Let's see. I thought, is it Toll Brothers? I know there was a couple of them in here. Oh, here we go. Toll Brothers. Big run breaking out, but you always got to look at the weekly to put it in perspective. So it's just taken out this prior high. I think if this takes out that high, this becomes an interesting place to look at Toll Brothers. Well, it's not the only one. We can look at DHY is another one, or DHI, DR Horton. Has not done the same breakout yet, but it's getting close, and I might draw a line here. I could wait for this, or I might look down here and see double momentum from a squeeze with relative strength and OBV looking okay. And from a high-low jump, it's only 45. So that was one area that I thought was interesting. Another area that I thought was interesting was some of the lower cost retail, Dollar General. Let's bring this out to a daily chart. Things are going to be a little slow here because I'm in a hotel, bad internet. Big run up, pull back, and a breakout from trend line. Earnings are not till March 12th. And as people are complaining about the cost of the first line, top line retailers, are they going to go to the Dollar Generals? Well, that one looks great. Costco made the list as well. Costco's had a big run here. And if you think Costco looks good, on the weekly, it looks great. Looks like it's getting ready to break out here. Good seasonality. What about our friend Mr. Walmart? Oh, I guess Walmart isn't on the list, but let's just take a look at Walmart, which has earnings, I believe, on Thursday. Here's the weekly on Walmart, looks even better. Look at the daily. Woohoo, Walmart looks great. I'm already in Walmart. And then lastly, what about some of those utility stocks? So a couple of the ones, AEIS, big breakout, a little bit of a wedge. Look for a breakout from a flag. Let's see what other ones we have here. Problem is there's so many stocks here. CMS, big breakout. And these pay dividends often as well. This one pays over 3%, 3.1%. And then one other will be NRG. 2.1 and NRG breaking out of here a trend line. Now, something that I found this weekend, Utes, is a utility, ETF utility that seems to run with those stocks that do data center power generation. And a beautiful breakout there. Does it pay a dividend? Don't know. So I think as bad as the MAGs are, and believe me, the MAGs are bad. In fact, here's the MAGS ETF pulling down to the 200. We're at a natural pace to bounce. We're at a minus 100 on the high jump. We looked at the market breadth saying minus 95%, natural place to jump. I think there's a chance that we're going to rally to new highs. So I created just a quick shopping list. try that filter yourself. It'll be a standard filter, and then very soon I've asked Praveen to add it, and let's see if we can make it better. Have a great day in the markets, and I'll see you probably Wednesday, as I'll be traveling on a red eye Tuesday. Take care, everybody.